So much these days. Will ETFs, Herb and everybody else force mutual funds to go the way of the dinosaur? Melissa Francis is live at the TD Ameritrade conference in San Diego. Melissa, over to you.
Thanks, Simon. I am here with Tom Lydon. He's the president of Global Trends Investments. He's also the editor of ETF Trends.com. Let me ask you first, because the job numbers is sort of the story of the day. Pretty disappointing. How do you think markets will react to that?
Yeah, well, job numbers bad, unemployment number good, but who's really believing that? I think the bottom line today is economic news is better, and we're also seeing investor confidence improve. So as we've gotten into the beginning of the year, there's a little momentum here. I think the average investor and the average advisor, especially at this conference, is more confident they've been in a long time.
And this doesn't knock the legs out from under it when we see unemployment not returning, or employment not returning as quickly as everyone had sort of anticipated at this point in the recovery.
Right, they have, and the same thing with housing. But I think what we've had to do is we have to take those sectors and kind of push them to the sidelines while the rest of the world is kind of moving on. And I think that's the way investors are looking at the market today.
You heard Herb Greenberg's report right before us, and I think one of his bottom lines is just the massive influx into ETFs right now. Are they really going to knock out mutual funds? Are mutual funds going to become a thing of the past, and is that a good thing?
Well, not anytime soon, but ETFs are kind of looking like the Facebook of the investment business right now,
That's
right?
a great analogy.
Yeah. They're storming hot. They're having more money come in as money's coming out of mutual funds. Mutual funds are actually closing, and all for the right reasons. You know, expenses are so much lower for ETFs. You've got the transparency. You know exactly what you're buying. There's diversification, tax efficiency, and liquidity, the fact that you can buy it in the morning and sell it in the afternoon.
But people worry that there is an inherent danger when you have a lot of people in ETFs. There's more volatility in the market. You have more trades going in unison, that it sort of amplifies the ups and downs. Are you worried about that?
I don't really think that's the case. It really comes down to choice. And if you know exactly what you're buying, and there's more disclosure, more transparency, again, with technology and efficiencies and what the brokerage companies are doing today and making it easy for investors, there's a higher level of trust.
There are 2,500 investment professionals on the floor here. I was blown away by how many people showed up. What's the buzz, just real quick? Positive, negative, hopeful? What's the tone?
It's hopeful. I think that's the great word. It's hopeful. But there's a lot of money that's shifting. And pertaining to mutual funds and ETFs, it's all about fees. So you look at what TD is doing along with the likes of Schwab and Fidelity's, they're battling it out. They want ETF investors, they want ETF assets, they want advisors that are using ETFs, and they're not only providing the tools in the ETFs, but also low expenses and great research as well.
Buckle up, Simon Hobbs has a question for you.
Just
Go ahead, Simon.
For the sake of the mutual funds, in fairness, you know, it's not all totally one way, is it? I mean, if you're a more not really the CNBC investors who you're making good on their own, but if you're a more passive investor and you're averaging in, you know, to take the kind of costs of trading to get into an ETF is actually more than you would pay to enter a mutual fund, and they're often quite thinly traded. They're often quite and they're often volatile in the market. If you have to get out, that can be problematic in getting a decent price at times, can't it?
Well, Simon, you're at the right point. Listen, 8 out of 10 active managed ETFs or mutual funds have underperformed their benchmark. But there's some great mutual funds out there, and they're not going away anytime soon. And to your point, as far as averaging into the market, yes, their transaction costs. There are fewer and fewer transaction costs and less, but for small investors, mutual funds probably are the best choice.
All right, Tom Lydon, thank you so much for joining us. And coming up at the top of the hour, more from the TD Ameritrade Investor Conference here in San Diego.